Time now to welcome on board another management on the show. Mr. Vivek Loya, the MD at Jupiter Wagons Limited, joins us to make sense of what's happening with the restructuring that the company has recently announced. Mr. Loya, what's the objective of the reverse merger? Could you tell us about the advantages and the impact it will have on your business?
Yeah. Good afternoon, Anisha. So the whole idea about the reverse merger was to bring financial as well as infrastructural strength to the group. So through the reverse merger, the bigger company, that is Jupiter Wagons, has now merged with SEPCO, which was the smaller entity, but it was listed on the stock exchange. We had acquired SEPCO around 3 years back from the banks. So now SEPCO no longer exists as a company. Now both the companies together as a single entity are now listed on the stock exchange.
Right. When we just talk about this merger, the back end that you've done, can you just tell us that what happened in the last few years? How have you changed? What sort of foray it gives you better in electric mobility space?
So, Pankaj, as you know, our core business is manufacturing of wagons. So, through this merger, what we have been able to do is that we had manufacturing facilities both in Calcutta as well as in Jabalpur. So now all the manufacturing facilities to manufacture wagons has now been integrated. Today we are one of the biggest suppliers of wagons to the Indian Railways, and our capacity is to manufacture close to 8,000 wagons annually. Besides this, the company has also now entered into strategic partnership with leading global players in the brake system business for Indian Railways. So we have now partnership with a Czech company called Daco as well as a company called Kovis. So we have now got the license and now introducing brake systems both for the freight business as well as for the mainline passenger coaches in India. The whole brake system market in India today is close to 3,000 crores and it's only dominated by two companies. And there was a huge gap which the railway needed to fill. So, with this joint venture and with our presence in the wagon manufacturing sector, we feel that we can fill this void and grow this business.
It's about gaining market share within that space. But can you just tell us that how would
it's not about Pankaj. It's not also about gaining market share. It is about also the existing core business becomes more strengthened. Today, if you look at our peers, we are the most integrated players in the market, and it helps both our bottom line as well as the top line.
Right. Can you just talk about the current business as well, in terms of volatility with raw material prices? You will be using a lot of these raw materials. How are you managing? Because can you just tell us, are prices of the contract fixed earlier? Difficult to pass on any escalation? And same way when it's going down, say in the next 6 months or so, how would it essentially change your outlook?
So, fortunately for us, all railway contracts have a pass-through formula built in. There's an escalation and de-escalation formula, since all contracts for us are long-term contracts. And this time, railway has given us contracts which we have to execute over the next 3 years. So the raw material volatility is a pass-through for us. So initially, when the prices went up, the escalations in the wagons which we were supplying had increased, and now with the raw material prices coming down, same will be passed on to the Indian Railways. So it's a win-win for us as well as the Indian Railways.
Okay, Vivek, that point is taken as well. So you're seeing quite a bit of order inflows from railways as well. But if you can talk some numbers in terms of the revenue growth, what sort of target do you have in mind, and even for margins going forward?
So this year we did a business of 1,200 crores and our EBITDA was close to 120 crores. Going forward, as I've mentioned you, we have a very strong order book. The railway order book for us is close to 3,000 crores, as well as we have more than 1,500 crores of private order books in hand, which we are looking to expand. Railway is going to again come up with a tender shortly, because in the last round there was about 15,000 wagons which they could not release the contracts, and what we can understand is that there is some additional demand also which is coming from Indian Railways. So we expect the order book to strengthen further. And on top of that, from this year, as I mentioned you earlier, the brake business also is going to start contributing to the revenue stream. So this will have a very strong impact on our bottom line as well as on our EBITDA.
Vivek, we'll let you go on that note. Thank you so much for joining us. Let's take a quick look at the markets because it continues to be very volatile. Pankaj, we went above the level of 15,800, but wasn't really able to hold on to that level because there has been as big a sharp decline that has come in and as big the spike that was there earlier.
Yeah, I think it's come back to not exactly at the day's
Sure.
low, but a lot of it has actually gone. And as